Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, welcome to the technical analysis of the Forex market from the ForexPeaceArmy.com. Today the 3rd of October and new month has started, so we will continue to talk about the euro currency as usual, and we'll start from the daily time frame. Well, I suggest you to visit our forum and read our long-term analysis of the monthly and weekly time frame, just to understand why we think that market still has the reasons to show some retracement to the upside. And two potential targets of that retracement could be areas around 137.20 or the deep retracement to the 140 area. But currently we should focus on the nearest term targets around 137.17. It's right here. One of these reasons is the new monthly pivot point. As you know, market usually trades the pivot points in the 70% of cases, so it's a rather high probability to touch that area during the October. Also, very often it happens that market touch the pivots in the beginning of the month, so it's just shows some touch the pivot and then accelerates to the downside. Although we can't refuse the fact that in general market environment currently is strongly bearish, as on the longer time frames as on the short time frames. But our task, since this is the daily video research, our task here is to create some trading plan for the coming week, especially for the Monday, maybe for the Monday-Tuesday period. So what we could expect in the beginning of the next week. First of all, you could see that how the failing of the butterfly pattern that we discussed on the previous week. This butterfly is left wing, right wing, 127 extension, target of this butterfly buy. How the failure of this pattern could shift to the another pattern, that is 3 drive buy. This is the potential pattern on the daily time frame, and particularly that pattern could trigger the retracement on the higher time frames. You can see that this is the first drive retracement. The second drive stands precisely at 127 extension of the third drive. The third drive, according to the rules of trading of that pattern, should be somewhere in the crossing of the 127 extension of the second drive from that low to that high, that is 132.69 area, and 1618 extension of the first drive from that low to that high. 1618 extension stands right here, 132.24. So we can see that these extensions stand relatively close to each other, and the third drive, if this will be the real 3 drive buy pattern, will appear somewhere inside that area. Probably it will be around 132.50 areas right here. So that is what we should watch for on Monday. It's appearing and continue move to the downside. But why? How we should know that market could continue move to that area and will reach that? This there is some pattern that confirms that and tells that probably this could happen with the high probability, and this pattern is the negative, the bearish dynamic pressure on the daily time frame. You can see, look at these 3 recent trading sessions. The red line on the chart is the MACD predictor indicator. This is the Judd-Napoli indicator. It's derivative indicator from the simple MACD indicator, and when the market stands above the red line, the trend is bullish. So if you will draw the simple MACD, you will see that it shows the bullish trend. But take a look at this price action. Market creates the lower highs, and the price action doesn't support the trend shift. So although the trend is bullish, price action is bearish. That is a negative dynamic pressure. This is bearish dynamic pressure, and this pattern couldn't show us the target of the potential move to the downside. One thing that is just could say is that market probably will establish the new low and the downward move will continue. That's why I do not rely on the divergences very often. And this price action tells us that why we should not trade only divergence, since if you will build the MACD indicator, you will see that's nice bullish divergence that we have discussed with that lows during the previous week. But that is why I do not rely on the divergences very often. So we see some pattern that confirms our assumption that probably market could continue move to the downside. If this will really happen, then we should watch for the potential free drive buy pattern. When the market will reach that area, we should drop our time frame to the hourly chart and watch for the precise some particular patterns, bullish patterns that could form in that area around 132.50. What patterns that could be? It's difficult to predict currently. Maybe it could be the double bottom, maybe this could be the reverse head and shoulders, maybe some Judd Napley patterns such as a double repo buy or something. But we will discuss it during the week. But that is our trading plan for the nearest term. Now let's shift to the 4-hour time frame. On the 4-hour time frame, we see that great ABCD move, ABCD pattern is forming currently on the market. Hourly trend is bearish. Also take a look, the target of this pattern of that ABCD stands precisely at the same area of the 3 drive buy pattern. That's why I mentioned this level 132.50, because this is the target of that ABCD move. You can see that move of this legs of ABCD and AB and CD is rather harmonic. The speed of these moves is almost equal. That's very good for the potential support in that area. Also, you can see that weekly pivot support areas 132.87 stands very close to the target of the potential 3 drive level, 3rd drive level. Okay, so our for most of us, the trading plan will be to wait for the reaching of that level and watch for the buy opportunities on the hourly time frame that could appear in that area. If they will appear, then we could try to enter along with the target around 137.11. That will be the minimum target of the 3 drive pattern. The target, as you remember, according to the major rules of trading that pattern, is the top between the 2nd and potential 3rd drive. The top is right here, so that will be the minimum target of the 3 drive pattern. If market will accelerate downward further and break out that area, then we have to say that probably this pattern has failed, and we will be searching for another possibility to enter on the market, another possibilities, another patterns after that. But that's a bit early to talk about that. Our primary focus is that area on Monday. If you're a scalp trader, probably you could try to trade some retracement to the upside if market will show any in the at the open on Monday. If it will happen, then your primary target is that area. This is the weekly pivot point and nearest fib resistance from that recent swing down. This is 134.85, 134.93 in terms of the December futures quotes on the 4-hour time frame, because all trends currently are bearish. 4-hour time frame, 4-hour trend bearish, hourly time frame bearish, so market should not show any significant retracement. All that we could expect is that market will test the weekly pivot point and then accelerate to the downside. So if market will show some retracement in the beginning of the Monday, you could try to enter short with the target around 132.50. Well, if you're an ultra scalper, you could try to even buy with some patterns on the 5-minute chart with the target around the weekly pivot point, but this creates some problems where you place your stop. So you will have to apply some significant loss management, money management to trade that shallow patterns. So this is beyond the scope of our research. We will not move lower than just hourly chart. On the hourly time frame, we see also the trend is bearish. This is nice for us to the downside. So market could show, for instance, bread and butter sell. In that case, you could try to enter short from that area. Or market could show some double repo buy. In that case, you could try to buy due to this pattern with the target around weekly pivot point. But this is very risky possibilities for trading, since our major task is to wait for the 132.50 area. So you will have to rule these trades by yourself, because currently we do not see any significant patterns. How market will behave in the beginning of the month, it's very difficult to say currently, so I could not give you some significant and detailed plan for the trade of this potential possibility that could appear in the beginning of the Monday. So we will stop at the trading plan that we have discussed on the 4-hour time frame. Probably market will show significant gap at the opening. We can't exclude that. It's just somewhere near that area. Who knows? Well, so that's been said, our major trading plan is to watch for the 132.50 area, since this is the potential target of this ABCD pattern, and the 3-drive buy could start from that area. Then we should drop our time frame to the hourly chart and watch for the clear buy pattern that could appear in that area. If this will happen, then we could try to enter long with the target around 137.20 area. If market will show close some acceleration on Monday and will break above that high, then probably we will have to deny our 3-drive pattern, because this is not very common. When the market is forming 3-drive, it shows some acceleration to the upside, take out that highs. This will be just the outside of the classical development of the 3-drive pattern, and if that will happen, then probably we will have to search for another patterns, another context for trading. But currently I think that market still will continue move to the downside and reach that area, and that will be our focus on Monday.